Well, as we've asked Big Daddy over the last couple of years here about real estate, things have certainly changed. And we're in for another one of those changes now, as it looks like interest rates may be on the way up. So Bryan Garrity, our real estate expert, Big Daddy, joins us here this morning for our regular Monday morning Ask
Good
Big
morning.
Daddy segment.
Good
well,
Monday morning.
So what do you think here about interest rates? They were kind of inching up and then back down, and
they're going up. They're going up. So it's something that people need to wrap their head around and understand that the days of interest rates in the threes are over, which was like free money basically.
Right. Wow. Truly.
And you look at it, and then we're now in interest rates in the four. Now,
which is still historically low.
Still historically low. If you look from World War II till now, the average interest rate, which this is something that I just picked up on, is 6.5% over all that time. So if you look at what the actual average interest rate that people have paid for houses has been 6.5%.
Wow.
We know that
since World War II.
Since World War II. And we know that people have paid 14%, 12%, all that other good stuff. But there's a lot of the pundits that are out there. You've got Freddie Mac, mortgage giant, owned by the government, Fannie, owned by the government. All of them are saying, look, interest rates are going to be on the rise. We're not going to continue subsidizing the government, which is, both of those are government-backed companies. We're not going to continue subsidizing these companies. We're going to have to bring private money, which was Wall Street, which basically caused what happened in the mid-2000s to collapse, giving loans just to about everybody. But it was equity-based back then. They weren't really looking at what I'm going to talk about. And all that stuff has fallen apart. So now they put it back together again, brick by brick. The government stepped in. They kept interest rates low. They can't do it forever, or else we're all in trouble. There's going to be huge inflationary problems. Let's just make it simplistic, that will come down the road. So people hear interest rates are now 4%. How come my friend got 4.75%? So I thought it would be good to touch on, I don't do loans, but I would be able to refer you to somebody like Wes Shaw of RPM Mortgage, who does do loans, and he does do loans very well. And there's a lot of good loan officers, but he's the best. Let's just say you have an interest rate. You're going to have a base marker from the bank. It's the money that the bank wants to make. So it's called the par rate. So let's say the par rate is 4%. That's what you read about in the newspaper.
When they list all those rates, and this bank and that bank is offering 4%.
For the most part.
But then you look into it, and you can't
then
find that money.
Right, no. Then all of a sudden it's really 4.99 or 4.875. And the reason is that par rate, the factors that are on the screen, they look at what's your equity position in the house. That could add, let's just say you're at 80%. That could add a quarter to your rate. So you start at 4, now you're at 4.25. Let's say your FICO score is above 740. You get a bonus, you get no hit. Your loan size, if it's above 417, you're going to get a hit there, somewhere between 0.375, maybe up to a half, just depends. Your lock period, so the longer that you lock your loan, 15 days, 30, you never do a 15-day in this market, but let's just say 30 days, 40 days, whatever it is, that's going to count. The type of residence you have. If you have a condo, you're going to pay up to 0.375% more in that interest rate than if you buy a single-family residence. Why is that? People wonder, why am I paying more because I have a condo? Because condos are just inherently more risky. You have litigation, which is almost a given in almost every condo complex. It just seems like they build a condo complex and litigation will follow. You've got HOAs that are mismanaged. You have people that get on these HOA boards that don't know what they're doing, and I hate saying it, but it's the truth, or people that don't want to step up. They mismanage the funds. The next thing you know, condo's not able to pay. It's just a more risky proposition.
Okay,
so
you're going to pay a little more.
At the end of the day, what's going to happen, that 4% where it started, when you take all these hits, and also if you have taxes and insurance added into your loan, sometimes they will give you a pass and not charge you, but some places charge you a quarter. Well, all those things we talked about, quarter, 3/8, and 8, this, you just went from 4 to 5 right there. So you may read about interest rates are in the 4, but I'll tell you right now, you go price a loan today, it's going to be 4.75 or 4.875. Days of the interest rates being in the 3s or lower are gone, period. I don't care. I'll take anyone on about it. Go. You can read about it, talk about it, unless something catastrophic happens in the economy and the government has to step up again. Which, I mean, if that happens, like I said,
we're in a lot of trouble anyway if that happens.
Yeah, we're already, seriously. We already have a bunch of deficit to make up. So to add on any more would just be a tragedy. And that would be not just a subject that you and I would be talking about. We'd be here for a whole hour having a discussion
So
about
I'm guessing the point of this whole conversation here is what we want people to know is interest rates are headed up.
They are.
And
They're
you gave
definitely
them
headed
all the
up.
information to back it up and why it's happening and what they should expect to pay. So you probably want people to move sooner rather than later.
You should.
Whether it comes to buying or selling, and get in touch with you.
Hey, get in touch. And first time, they always leave out the move-up buyer. I don't know why they do that. They're saying first-time home buyers make up 70%, investors make up 30%, and there's no first-time or move-up buyer in there. Don't look at those statistics. Doesn't really matter. You know what matters? It matters what you can afford and where you can afford to live.
All right, get in touch with Bryan Garrity, the Garrity Group.
And now you know how interest rates really are factored in. So now you know why when you read it's 4, it's really not 4.
You got a lot more information now, and all you have to do is pick up the phone and call Bryan. Get in there and see him. And also, you'll put everybody in touch with Wes when it comes to loans as well.
Absolutely.
And your radio show, Wednesday
Every
at 1 o'clock.
Wednesday and Wednesdays at 1 o'clock. We're having a great time this week.
ESPN Radio, 1700.
ESPN 1700. It's
All
great
right.
fun. Thanks, Steve.
We'll
Good seeing you, Mark.
You too, Bryan.
Mondays.
All right.
Monday, baby.
For more information, you go to san diego6.com and you click on San Diego Living.